Welcome to Explain the Charts. Today, September 17th, 2025, we're taking an in-depth look at Apple, ticker symbol Apple, and analyzing how recent news and market events are shaping its price action. The overall market sentiment is overwhelmingly bullish, with the S&P 500 recently topping 6,600 and the Nasdaq extending its record streak to 5 straight closes, hinting at a robust economic backdrop. Adding to this optimism, Wall Street strategists are lifting their S&P 500 targets, and there's a strong expectation for the Federal Reserve to implement its first rate cut of 2025 this week, which typically provides a tailwind for growth stocks like Apple. However, despite this generally buoyant market, Apple itself has faced a lukewarm reception to its recent product unveiling. The highly anticipated iPhone 17 launch event on September 9th left many investors and analysts underwhelmed, perceiving the new devices as incremental upgrades rather than revolutionary breakthroughs. This immediately led to a significant sell-off, with the stock falling over 3% on the day of the event, indicating a sell-the-news reaction as much of the information had already leaked. Concerns are also mounting over Apple's pricing strategy, specifically the iPhone Pro 17 launching at $1,099, a $100 increase from its predecessor, which raises questions about potential margin impacts due to rising tariffs. Furthermore, analysts express apprehension about Apple lagging in the crucial artificial intelligence megatrend, with meaningful Siri upgrades reportedly delayed until spring 2026 and signs of market saturation in the mobile sector. Looking at its Q3 2025 financials, which ended June 30th, total revenue remained flat year-over-year at $94.04 billion, while net income and earnings per share saw a slight decrease, painting a picture of stagnating growth. Interestingly, there were also reports of overwhelming demand for the iPhone Pro Max 17 in cosmic orange, with devices out of stock in the US and India, offering a glimmer of positive news amidst the general disappointment. Now, let's turn our attention to the charts to see how these news items have influenced AAPL's price. On the daily chart, looking at the entire range from May 2024 to the present, we can observe a clear uptrend throughout much of 2024, followed by a period of consolidation and volatility in early 2025. Apple had reached a high near $259.02 in late December 2024, an important resistance level that aligns with IBD's noted buy point of $260.10 for a 37-week consolidation pattern. However, from January 2025 onwards, the stock struggled to break decisively above this region, experiencing several pullbacks. Zooming into the recent past, specifically around the iPhone 17 launch on September 9th, we see a dramatic reaction. On September 9th, Apple opened at $237 and closed at $234.35, marking an initial decline linked to the underwhelming event. The selling pressure intensified the following day, September 10th, with the stock opening at $232.185 and plummeting to close at $226.79, confirming investors' negative sentiment. This sharp two-day drop of over 4.5% clearly reflects the market's disappointment and the sell-the-news phenomenon we discussed. The significant increase in trading volume during these down days further emphasizes the strong conviction behind the selling. This rapid descent brought the stock close to what IBD identified as an early entry buy point of $235.12, a level that was quickly breached. Switching to the 1-hour chart and focusing on the period from September 10th to today, September 17th, we can observe the immediate aftermath and subsequent recovery. Following the low of $226.79 on September 10th, Apple began to find some support and initiated a short-term rebound. The price steadily climbed back, pushing past the $230 mark and retesting the $235.12 level, which now acts as a short-term support after being briefly broken. By the close of trading on September 16th, Apple had recovered to $238.15, showing resilience despite the initial shock. perhaps partially fueled by the wider market's bullishness and reports of specific iPhone model demand. This recovery could indicate that the initial sell-off was an overreaction, or that long-term investors are stepping in, seeing value at these depressed levels. Now, let's examine the most recent intraday action on the 15-minute chart, covering September 16th and the early hours of September 17th. On September 16th, Apple showed strong upward momentum in the morning, pushing from its open of $237.175 to an intraday high of $241.22. However, it couldn't sustain these gains, pulling back to close the day at $238.15, indicating some resistance around the $240 psychological level. As of this morning, September 17th, the stock is opening around $237.175 and has seen some consolidation, trading in a relatively tight range between $237.80 and $239.50. The volume on these shorter timeframes is considerably lower than during the initial sell-off, suggesting that while the price is stabilizing, there isn't yet strong conviction for another significant move. This consolidation around $238 could be a crucial setup for the next directional move, as traders weigh recent news against the broader market rally. So, when should you be bullish or bearish on Apple? Bullish arguments hinge on the broader market strength, the anticipated Fed rate cut providing liquidity, and the potential for a rebound if the iPhone 17 sales figures prove stronger than initial analyst reactions suggest, especially given the cosmic orange demand. If the stock can firmly break above the $240 level with sustained volume, it would signal a bullish reversal, potentially targeting the prior highs around $245 and eventually the major resistance at $260.10. The stock trading above its 200-day simple moving average, as noted by CNN, also provides a long-term bullish underpinning, suggesting underlying strength despite short-term volatility. Bearish sentiment is driven by the perceived lack of innovation in the iPhone 17, concerns over pricing and margins, Apple's lagging position in AI development, and overall market saturation in its core product categories. If Apple fails to hold above the $235.12 early entry buy point from IBD, and particularly if it breaks below the recent low of $226.79, we could see a further decline, potentially retesting previous support levels not seen since late 2024. A sustained break below $226.79 could even open the door for a move towards the $220 to $222 range, representing a more significant correction. To recap, here are the crucial price levels to watch for Apple. The immediate support is around $235.12, reinforcing the bounce we've seen, followed by the critical low of $226.79. On the upside, immediate resistance is found around $239.80, which was the peak before the iPhone 17 event, and then the $245 region, which it tested in January 2025. The ultimate long-term resistance and major breakout point remains the $260.10 level, coinciding with its previous 52-week high. The likelihood of a bullish continuation is approximately 60% in the short term, given the broader market strength, but this is highly contingent on official iPhone 17 sales data surpassing current subdued expectations. A confirmed Fed rate cut this week would further reinforce this bullish outlook, likely increasing investor confidence in tech stocks. Conversely, the likelihood of a bearish retest of recent lows is around 40%, particularly if Apple's upcoming quarterly earnings report reflects continued flat revenue and declining profit margins, or if any further negative news on AI integration emerges. Traders should closely monitor the actual iPhone 17 sales figures when they become available and any new developments regarding Apple's AI strategy. These factors will be key in determining whether Apple can overcome its recent product event disappointment and resume its upward trend, or if more downside is in store. As always, trade with caution and combine technical analysis with fundamental understanding.